Good afternoon and welcome to our very first Elite Funds Maximiser monthly review for August 2015. David McCulloch here sitting alongside Jeff Sapper. Welcome, Jeff.
Thank you, Dave. Hello, everyone.
Hopefully by now you've had an opportunity to watch the introductory webinar that we did last Friday, either attended the webinar in live or perhaps seen a recording that you would have been notified of through an email this morning. If not, please make sure you watch that as soon as possible, and that'll make the Elite Funds Maximiser make a whole lot more sense. Alright, today what are we going to be covering? Let's have a look. The agenda. To start with, the strategy recap. So we're going to talk a little bit about what the strategy involves, how you can implement it, and the mechanics behind it. We're also going to have a look at the ETFs for this month of August, which ones they are and why they were picked. And we're also going to have a little bit of a preview of the ETF portal, which you will all see. Those of you who are members of the Elite Traders Club or the Elite Investors Club will be familiar with the current portal setup. When you log in, you'll see another icon on which you can click, and that will grant you access to the ETF portal. So let's get underway, Jeff. But first of all, our disclaimer. And the disclaimer basically states that the content of today's presentation or any other Elite Wealth material does not constitute a recommendation, nor does it take into account your investment objectives, your financial situation, nor particular needs. So please, before making an investing decision based on the general advice presented in any of our presentations, please consider whether the advice is appropriate in light of your financial circumstances or seek further advice on its appropriateness. You may pause the video now if you like and read the rest of the disclaimer and then click resume to watch the rest of the recording. Alright, first of all, the strategy recap. What is the strategy all about? Well, basically, Jeff and I have put our heads together for quite a period of time now and looked at a way of investing, a longer term approach to investing where we can make use of ETFs. In putting together a basket of ETFs in consultation with Jeff, particularly with a large amount of experience in fundamental analysis and certainly a very good understanding of correlation amongst assets and sectors, etc., we were able to put together a basket of ETFs representing a range of markets, a range of sectors, a range of commodities as well. So as an example, we have in our universe indices like the S&P 500, Jeff, the Australian market. We have exposure to Europe. What are some of the other ETFs in the basket, Jeff?
Yeah, there's also outside of Europe, we have some Asian markets as well.
Yep.
And then they are all equity, so all global share markets. Mm-hmm. But on top of that, we also have ETFs that are exposed to US property, bonds,
yep.
Bond markets, yep. Commodities, etc. So it covers, as you mentioned, different asset classes and different regions. So really looking different types of available investments.
Yeah, and obviously as part of the selection of the basket of ETFs, we had to go through and make sure that there was a degree of anti-correlation amongst those assets that are covered in the basket of ETFs as well, Jeff. So as an example, traditionally correlations between bonds and ETFs have had like an inverse type of relationship.
Correct.
Which over the years has varied. Sometimes it's been quite a direct correlation, but at other times an inverse correlation, which has obviously added strength to the basket of ETFs as well. The method behind the strategy, in one word, if we could summarize it, I think momentum is probably the best definition, in that it uses relative strength, it uses past performance, measures of volatility as just a few of the criteria that the scan actually looks for. So from that basket of ETFs, the system is looking for those stocks that have the greatest degree of momentum. And if you think about it, momentum is really just one way of measuring money flow. Now, we've talked about this before, but the guys and girls who move the market are really the big institutions, and the way that they make their decisions to get involved into certain assets, certain sectors, certain classes of stocks, etc., is through fundamental analysis. So at the very heart of this is big money, if you like, trying to find a home. So that's done on a fundamental basis, and from a technical point of view, our systems get to pick up on that money flow through the proprietary scans, and it's interpreted as momentum. Momentum, just like in nature, Jeff, is something that once it starts can take quite a while for it to stop.
Yep.
And that would be fairly typical of like a large fund investing into an asset class as well. So not putting all their eggs in one fell swoop, but so to speak, sort of accumulating over a period of time. And that's the sort of thing that the strategy is looking to pick up on. We're also going to go through and have a look at the current holdings. Now, at this point in time, there are no existing current holdings for the month of July that's just passed, but certainly each month we will go through and examine what the current holdings are, what the performance was, and what the future holdings for the next month are as well. And obviously the important part is what are the new holdings for the current month. So we'll go through that as well, and the actions that you'll need to take to purchase the relevant holdings for the future month. All right, current holdings. Obviously, there's none at the moment, but certainly in next month there will be 2 ETFs that will be current holdings. So obviously next month we'll have a review of the holdings that were for that particular month. Right, the ETFs for this month, we've run the scan because we were at the end of the month last week, Jeff. We've run the scan and we've had 2 outputs. The first of these is the PowerShares QQQ, very much representative of the NASDAQ Tech Index. And the second one on the list is XHB, which is the Spider Home Builders ETF. Jeff, I might just hand it over to you just to provide a little bit of background about each one of these, perhaps starting with the PowerShares in particular.
Sure. So what we've got here is some vital stats, some basic information about the ETF. Now this information is also downloadable from the Elite Wealth website within the Elite Funds Maximiser product. On the Learning Centre, there is this fact sheet for every single ETF in our universe, but we'll include it each month so you can get the basics of what we're looking at. So PowerShares QQQ, it's exposed to the US tech sector, and it's basically measured against the NASDAQ 100.
Yep.
It's been around for 16 years, which is quite a long time for an ETF. They've really taken off in the last 5 to 10 years, so this is quite a long-lasting one. It's one of the biggest ones out there with a market cap of $41 billion. And average turnover, so each day in recent trade, there's about $3.33 billion worth of QQQ traded every day. So it is very, very liquid.
Yep, lots of volume.
Lots of volume. It's one of the very most popular ETFs available. Expense ratio. This is the percentage of the fund's assets that are charged by the provider to run the fund at 0.2%, which is very, very low.
Yep.
If you think about it, typically a managed fund will have expense ratio of maybe 1.5 sort of 2%. So very, very low there. Top 3 holdings. So QQQ obviously invests its money, its funds across different investments. By far the biggest investment is Apple, followed by Microsoft and Amazon, obviously 3 major tech companies in the US.
Yep.
And what we've got there on the website, and if you're looking at these slides, you'll be able to click on the link there, and it'll take you to PowerShares fact sheet,
yep,
which is a fairly pro forma document for a few pages with all the critical stats about QQQ. We've grabbed the most vital ones here,
yep,
but if you want more information, just click on that.
Okay.
All right, now just a bit of a graphic there to show you what makes up QQQ. So where is the money invested? Obviously, we talked about the 3 major holdings. Everyone assumes that the NASDAQ is just tech shares. It's actually not that simple. So a little bit over half of the shares in the NASDAQ 100 are classified as technical IT, as IT companies. Yep. But then there's also quite a few consumer discretionary companies. So they are still tech companies, but they, instead of selling software or computers and hardware and things like that, they will be selling tech, products to the everyday person. Something
Yep.
like an Amazon is not necessarily a tech company. It's a retailer. It's an online retailer. So that's in the Nasdaq 100, obviously. Healthcare and consumer staples, and then the rest of the traditional sectors aren't really represented in the Nasdaq. So it's obviously very tech heavy.
Yep.
Just the chart here of the last 12 months. I might hand over to Dave to comment on that.
Thanks, Jeff. This is a chart, obviously, of QQQ, the Nasdaq-based ETF. You can see quite clearly, left to right, that the trend is certainly in the upwards direction. Recently, third candle from the end there, Jeff, a very bullish candle, a Maribozu, as we would call it in technical parlance. Flat on the top there, very strong candle. Fundamentally, the reason there, Jeff, you were explaining to me before, was we've got earnings seasons at the moment.
Yep.
And so what's behind that big move? Obviously, technically very, very strong, a series of higher, longer term troughs pointing in the right direction, at least from a technical point of view. But behind this, again, the fundamentals, great big Maribozu there, Jeff. What's behind that?
Yeah, so as you mentioned, reporting season, and in the US, they report quarterly.
Yep.
So companies have just come out with their results for the last quarter, telling the market how much they've made and how much revenue they've recorded, how much profits they have managed to bring in, and a few tech companies really blew the lights out. So Google jumped about 15% and up to its highest level it's ever gone to. A couple of other major tech stocks as well, which I'll mention shortly.
Yep.
But that was the big breakout there, and to me that's actually a big sign. Personally, I really like seeing. Normally when I look at an individual stock, when I see a stock jump up on earnings, it's not just it's going up because just randomly the market's going up or people decide to buy it. There's a fundamental reason. So you obviously explained and showed that the QQQ's in a nice uptrend. It was actually going sideways for a few months and then it's managed to break out. So broadly speaking, US stocks in general have been just rallying so strongly since the bottom of the GFC.
Yep.
Really put on gains a lot stronger than what we've seen locally. And within the US shares, the tech sector has gone particularly strong. Yep. So we've seen some huge performances in the Nasdaq and individual tech stocks.
Yep.
The Nasdaq depends whether you look at if you look at the Nasdaq Composite, which is looks a
bit broader,
yep. That's actually back to the pre-dot-com highs. So it's really interesting. Obviously, most markets around the world hit their peak 2007, had the GFC, and then they've spent the last several years recovering that ground. The Nasdaq hit its high back in the early 2000s and then fell so far that even in 2007 it was nowhere near its previous high. So it spent the last many years in recovery mode.
Yep.
And it's now back to above those crazy heady dot-com bubble days to show how much 10 years or 15 years ago people were buying these stocks on potential. Yep. Now they're buying them, now they're delivering. So the Nasdaq 100 is just a little bit below that pre-tech wreck.
And this has been a very strong index for quite a period of time as well. So certainly
one of the best performing indices in the world for the last few years.
Yeah, absolutely. And recent reporting seasons there, you just mentioned, Jeff, a few stocks in particular.
Yeah, so Google jumped up to record highs, Amazon as well, Netflix, all at record highs, and they all jumped up a huge amount during reporting season. Apple, actually a couple of weeks ago, was at its highest ever levels. Yeah. Its most recent results are a little bit soft, but it's still pretty close to record highs. So those are four of the really big names, and just representative of how things are going in the tech space.
Yep, so there we have it. So it's QQQ. The next one, XHB, the Home Builders ETF, Jeff. At this point in time,
yeah. So the Spider S&P Home Builders, it's exposed to companies involved in the home building industry, I should say.
Yep.
So looking at building companies, contracting companies, concreting companies, development companies in the property space.
Yep.
It's been around for almost 10 years, a market cap of a couple $2 billion. Mm-hmm. So this is what we would call a sector ETF.
Yep.
It's exposed to a part of the US stock market. Average turnover of $107 million a day, so very liquid. Expense ratio about 1/3%, so still very cheap. Top three holdings, you can see there are some prominent property companies in the US.
Yep.
And again, if you access this document, click on that fact sheet, and it'll bring up the
portal,
providers.
and it'll bring up all the details of it.
So I've got a couple of charts here to talk about. It's fairly interesting, certainly from my perspective. The first one is the Case-Shiller Index. What this does is it tracks house prices in 20 major capital cities in the US. So if you think about it, companies that are building houses, what do you want to see? You want to see house prices going up. And when house prices are going up, people get excited about property and they start buying blocks and building new houses and knocking down old ones and things like that. So first we've got house prices, and you can see the big boom in the mid-2000s, the GFC, and then it spent the last sort of 4 years in recovery, and recently it's just lifted off again, so it's at highest level since the GFC. And the next chart, so that's house prices, the first one.
Yes.
The second one is housing starts.
Okay.
This is data they release every month, talking about the total number of new dwellings being built, or being started being built. So we have, in a sense, it's similar to housing approvals in Australia. A little bit different, but just shows the level of activity in the sector. And you can see that's been in a steady increase for 6 years. Still a long way back from the GFC highs when property was going berserk in the US. But you can see very steady trend there. And if anything, there's a lot higher to go before you get into crazy territory.
So signs of an improving economy per se? Yeah,
look, definitely. I mean, certainly an improving economy, low rates, unemployment's coming down, people have got more money, house prices are going up. Everyone's just saying, what can I do with my money? Well, I'll build myself a nice house.
Sure. Okay. Obviously, a chart here, and again, last week's candle in particular, very, very strong. Over a period of time, again, you can see the same sort of thing. We've got a series of rising troughs for a period of time, very early from October 2014. So last year, moving up to sort of highs around about February, March, and then a little bit of sideways movement, and recently just showing some strength coming through there. Obviously, they've got very low interest rates in the US at the moment as well, Jeff, so for people who are wanting to take out loans and build houses and those sorts of things, construction, etc., are starting to come through there. So the fundamentals clearly coming through in the technicals in this particular example. Let's go and have a look at some of the themes within XHB. Low rates fueling property recovery, just mentioned that there, Jeff. Have you got anything to add to that?
Yeah, look, obviously there's been a bit of talk in the US about rates going up, and that's a big issue at the moment. But you've got to remember that rates are almost at zero at the moment, so at record emergency levels. And look, rates starting to go up from virtually zero is okay. It's certainly once it gets over a certain amount that investors start to balk. So if you think more in terms of like Australia, you could borrow money at probably 4% for property at the moment. If rates went up to 4.25%, would you change your mind about investing in the property market? Probably not. Look, once rates got up to 6, 7 plus, you might scratch your head and say, look, I'll just hold off for now. But certainly when rates start going up, it's probably not going to make a big difference. House prices I showed that are at their highest level since the GFC. And in terms of rates, the other big thing about rates is, yes, the Fed can start putting up rates, but in America at the moment, you can take out a 30-year fixed mortgage, fixed rate of, on average, about 4.04%. So you lock in a 30-year mortgage at 4%. To be honest, you don't really care if the Fed's putting up rates because you've locked in what is essentially ridiculously low interest rates. And incidentally, the long-term average of this 30-year rate is over 8%. So right now, it's just so cheap. It's so appealing to borrow money, knock down an old house and build a new one over there.
Particularly with a capped interest rate at those sorts of levels. So maybe that might even be attractive to overseas investors as well. Housing starts, as you mentioned, closest to highest level since the GFC.
So a couple of months to the third last reading on this was the highest we've seen since GFC. We had it pop down a little bit and pop back up, so we're really close to that record level just a couple of months ago. And company profits are at record highs, so obviously this tracks not specifically the property market, but companies that are building houses.
Mm-hmm.
So obviously companies over in the US are making lots of bucks at the moment. And what's really interesting is that even though there's plenty of positive signs for the housing market, the sector actually offers a really good valuation. So the PE over the next few years, so price to earnings, it's an indication of whether something's cheap or expensive.
Yep.
It's 16% cheaper than the S&P 500. And dividends, which is not a big, admittedly is not a big focus in the US, but the home building companies are paying about a third more dividends at the moment and in the next couple of years than the rest of the market. So not only can I make a good case for this being a really good area to put your money in, often that tends to mean something is expensive.
Yep.
But this is really good. It has really good fundamentals and is also looks quite cheap.
Yep. Okay. So really interesting, and I hope everybody's getting the idea that, behind the momentum theme, if you like, that there are fundamentals, really important fundamentals in the background which the system is picking up. So the actions for this particular month, Jeff, buy QQQ at market. So that's tonight on the open in the American market. Again, you'll probably need the right sort of platform to do that. So again, if you've got any questions about that, you can either contact us or our affiliated broker, 708 Capital, and you can speak to Nick Worrell there, and he can answer questions about how he can help you facilitate that or help you open up an account that it can allow you to do and place those particular orders. So that's one half of the order for this month. The other half is to buy XHB, again at market tonight once the market's open. So they're the two actions for the month of August. Towards the end of today, you should be receiving an email with the recording here attached that you're listening to right now, but also notifying you of the availability of the live Elite Funds Maximiser portal on the website.
For those people that have purchased or have access to the product.
That's right. So our ETC members, EIC members at the moment, you'll see that there is another portal there that you have access to. Completely while you have your current subscription to either ETC or EIC. The Elite Funds Maximiser icon there, all you need to do is click on that tab and it will open up a secondary page. Jeff, would you like to explain a little bit about this?
Sure. So all the information about in the Elite Funds Maximiser product are in these tabs. The first one, current month, simply just has it shows what the current investments are. It has the latest video, so you can watch similar to the video you're hearing right now.
Yep.
And then a summary of the presentation. What happened last month? What are we buying this month? The blog is there as a secondary bit of communication. Obviously, anything in between the monthly updates that we need to convey to members will update the blog during the month. Track record shows historical selections for the product and how they've performed and comparing them to the market as well.
Yep.
And that's the Australian market.
Yes.
The archive has a history of all of our previous monthly videos. Of course, this is the first one.
Yep.
And then the Learning Centre will have some important documentation,
That's right.
product manuals, etc., and videos to help you understand the product and get the most out of it.
Yep. And certainly, if you need any help finding your way around that portal, don't forget the emails that we send out. We'll have a coaching call tab on them, so please just click on the link and one of your coaches will be in contact to assist you with that. Jeff, that just about wraps things up for today. We look forward to joining you for what we are quite excited about with the release of the Elite Funds Maximiser on a monthly basis and mid-month communications as well. So for me, it's goodbye, and Jeff,
Thank you, from me too.
and thank you for watching, and we'll catch up with you very soon.